Hello, ladies and gentlemen. Welcome to the newest edition of Levelytics on Video. I am your host, Jordan, and it's good to be back for another edition, you guys. I hope everyone's doing well. I hope people aren't falling to sleep in these boring, non-exciting crypto markets. And I figured, given the market conditions and also considering it's been a long amount of time since I last did this, I wanted to publish and do a video related to the Levelytics strategy and how it's performed and some of the data behind it, and mostly to check and answer the question, am I actually performing the strategy as I intended it to be? And for those of you who do not know, the Levelytics portfolio is a spot only, long only, momentum driven strategy, right? And my holding period for my trades and my trading strategy, which I've shown to you guys before, denoted by the blue and red candles in TradingView. It's just a TradingView momentum strategy that I built up. Blue means that I want to buy and hold, and red means I don't want anything to do with it, right? And this is the BTC USD chart. So I wanted to check to make sure that I was actually executing the strategy as I intended it. The last time I performed this exercise, I can't even remember when I published it, but what I did conclude is that I was sticking to the game plan. I was actually executing things as they should have been executed. So this is a follow-up on that. And considering that the Levelytics portfolio began trading October of 2025, we're coming up on almost 11 months here, right? October 1st of 2025 is when it started, and it is almost September 1st. So we are almost at that 11-month mark. So I'm going to run you guys through some charts that were also included in the written article, and then we'll do a very quick and dirty market commentary. The reality is that my my dude terminal data is just not what it used to be. And the main thing is that, like I mentioned to you guys before, don't have the database anymore. So I'm going to keep things simple, and I don't think there's much to discuss here on the market side, but that's why I'm just going to keep things focused on the Levelytics portfolio. And the main reason why I publish a video like this is just so maybe some people might find this boring, but some people might find ideas and ways to track their own portfolio and do analysis behind their own execution strategy, and to make sure that they actually are doing what they thought they were doing, right? So let's get into it. So you've seen this chart before. This is the cumulative return of the Levelytics portfolio, which is the blue line at the top. The green line shows the BTC cumulative return since Levelytics launched October 1st, 2025. And the red line shows the median altcoin return. And you can see that Levelytics has outperformed BTC and alts. Unfortunately, though, right, the market has effectively been down only since October 1st, 2025. Levelytics launch was basically the ultimate sell signal, as some of my friends like to joke with me, right? So since then, the Levelytics book is down around 35%, BTC is down 46%, and altcoins are down around 66%, right? So, because it's a long only momentum driven strategy, naturally, the strategy lost money during the bear market. I think one thing that I need to work on and try to shore up is come up with some version of the strategy that allows me to make money in sideways conditions and downwards conditions. I haven't had the time really to do that. I've just been super busy. As many of you know, I just moved across the country, so kind of just been getting my life back in order. But yeah, the strategy has performed as I would have expected. And given the way I go about cutting losses within the trading strategy, it's not surprising me that it outperformed also altcoins and BTC. So this looks fine, and not much more to say here. So I'm not going to waste your time on it. So the next chart here, right, this shows the blue line shows you the percentage of the portfolio that is in cash, right? And the red line shows you the BTC 30-day returns, right? So this black horizontal line is the zero for both of these, right? So if you see the blue line at the black horizontal dotted line, that means it's zero. And that means if the red line is at it as well. They share an axis, basically, is what I'm trying to tell you, just so it's not confusing. And the reality is, I talked about this in the article, the percentage of the portfolio in cash needs to be moving inversely to the BTC returns for this execute. If you're trying to figure out, am I executing a momentum strategy properly, right? So if price goes up, I should have less cash, right? As price goes down, I should have more cash, right? So these lines should be moving opposite from each other. And right, you can see that the blue line has been mostly high values, right around 80%. of the portfolio in cash for a large chunk of the bear market, right? As prices just were down only. There hasn't just been much time. And the only time I deployed a lot, i.e., the cash portfolio dominance dropped, was in May of 2026 this year, right? And that was a big month. There was a lot of activity. That's when BTC went back up to the 80K level, tested that resistance. And then as you can see, as it got rejected from it, you can see the red one. I'll hide the dollar dominance. In May, right, it was positive values up here. This is when I started deploying cash. And then as it flipped negative at the end of May, at the end of May, you can see that my cash dominance is going up. That means I started collecting cash as price went down. The problem is that it giga nuked and I did not get fast enough to it. So unfortunately, I actually ended up moving mostly to cash, to 100% cash, pretty near the bottom. What ended up happening after that, though, if you really want to get through my psychology of what was going on here, right? You know, BTC 30-day returns after for a while, for the rest of June, kind of just waffled about around these low values around minus 20%. My strategy after this point in time, after BTC didn't end up rugging further than 60K, I was kind of like starting to reach the attitude, I'm like, that might be the final drop, right? If Saylor concerns and STRC concerns and, you know, their whole strategy and people panicking about it doesn't implode the market and doesn't push it any further, I'm kind of just like, okay, I'm kind of comfortable holding some amount of crypto at this point, right? So if you just look at the cash dominance of the portfolio, right, it has been 50% cash, 50% deployed into crypto for about a month now. And I'm pretty comfortable with that. And I'm kind of just waiting for the new bout of volatility, which I talked about in the previous video and previous article, right? There's just been not much volatility in the market. And I think at some point this thing's going to pop. But my opinion is that the last time I moved to 100% cash was at the beginning of June when the Saylor concerns kicked in. I think that might have been it. So for the time being, I'm just 50-50. We'll see. So this is another way to gauge if I'm actually executing my strategy correctly, right? The blue line, what the blue line shows you is the percentage of the time I have a heavy cash balance. And what does a heavy cash balance mean? A heavy cash balance means that more than 50% of the portfolio is in cash, right? So this value, this blue line is saying is 70. The cumulative value of this is 70. And that means that 70% of the time I have more than 50% of the portfolio in cash. And that makes sense. That means I'm actually executing as I should within the market. And for a little bit of context, the red and green lines show respectively the percentage of the time that BTC or altcoin 30-day returns are positive. And what that means is what percent of the time are BTC and altcoins performing well, right? And the reality is it's not been very often. BTC has performed well 40% of the time and altcoins have performed well about 30% of the time. So if you want to think about, the percent of the time that I'm holding a lot of cash, it's almost just the difference between 100% and the altcoin returns, which is what most of my trading is focused on, is altcoins. So it makes a lot of sense. The way the market has been going tells you that I've performed at the strategy as intended. So let me hide the portfolio dominance of cash. And this is just BTC and alts. And you can see that this value is climbing over time though, right? It's good to see this. This might indicate, as if these values were continuing to go down, it would tell you that we're just disgustingly bearish and there's no sign of reprieve. However, over time, it's been going up, right? You had this initial value at the beginning, right? From October down to December, it was kind of down only, where 30-day returns were basically always crappy, right? And it bottomed out around 5 to 10% for each of them respectively. But now we're at a point, like I said before, BTC has positive 30-day returns 40% of the time, and it's been climbing, right? And I'm also sitting on less cash more often, right? So you can see that I'm getting more and more comfortable holding crypto, right, as this value goes down. And part of that is because over time, BTC and altcoin returns are improving. So we're kind of reaching a point in the bear market where it feels like there's only so much you can shake the tree and bleed this thing out. And it doesn't necessarily mean that I'm right and that the next time we get a bout of volatility, it's going to be to the upside. But I think this is one of those signals here, just from looking at the market and the way I've been allocating my portfolio, to show you where I stand on everything. So we'll see what happens. So this shows you the monthly returns of the Levelytics portfolio, right? And you can see in October 2025, November 2025, which is right when everything began to die, we had the huge deleveraging event across the crypto space, huge spikes downwards in the Levelytics book. And things went quiet for a long time from December 2025 through April 2026. Didn't have more than a plus or minus 5% month, right? There was just not much going on here. I was also just not very deployed, right? If you want to go look at hold on one second. If you want to see the percentage of the portfolio in cash, it was pretty high. The book was pretty much 75% cash or more for that entire period. So it makes sense that there was just not much going on here. And then as you can see, in May, I deployed a lot and the returns popped, right? Got a 15% month in May 2026. The problem is that I was a little too exposed to the market, right? And when you get a little too exposed to the market, you get your worst month afterwards, right? And this was on the Saylor dump in June 2026. So this kind of tells you, what kind of market we've been in. It's been mostly down, quiet, sideways, and these quiet returns show a lack of volatility and a lack of exposure on my end. And this was just naturally like capitulation, right? Deleveraging event, capitulation. So you can see that there was not much going on under the hood in July 2026. I kind of took a step back from the market. I was moving. I didn't think anything was going to happen. When you get a dump going into the summer, especially in crypto markets, it's kind of like, if the sell in May thing actually does happen, nobody is going to just jump back to their desk to buy the dip, especially in crypto markets. No offense to, the crypto stakeholders, constituents, traders. It's just the same. It's like, dude, nothing's going to happen here. So yeah, this makes a lot of sense. And my August returns, I assume, will be pretty similar just because there hasn't been much movement in the market. And to tell you the truth, I haven't done much allocating. So we'll see. Okay, so this shows the monthly portfolio turnover. And the way this is calculated, it calculates 30-day volume for my account, right? All of my funds are traded on a crypto exchange and divided by the portfolio value. So if the value is 163% here for November 2025, what that tells you is that the total volume I traded over a 30-day span was 163% of the value of the portfolio, right? So higher values tell you I'm trading more, lower values tell you I'm not trading much, right? So this just tells you, this is another way to gauge my level of activity within the market. And you can see things just went really quiet for a very long time. And I got really active once again in May. And then June, active again to the wrong side, right? Because I had to panic and close my positions. And as always, in crypto markets, traditional markets, you live to fight another day. So that's kind of the MO in the trading game. So this kind of tells you everything, right? It's just been a long lull. After October and November 2025, it's just been pretty boring. And I was mostly checked out. And this period from December 2025 to April 2026 was the period where I built that cushion of performance versus BTC and altcoins, right? And then May, I was starting to get really excited and I won some of it back. If you want to look at the cumulative returns, at one point, hold on one second, let me hide the BTC and altcoins. At one point, it got up to minus 17%. At one point, the Levelytics book was only down 17% because I just made so much money back. This was a fun little period before everything just reversed in the wrong direction. Okay, so with that in mind, this chart shows fee drag. And what fee drag if you're asking me what is fee drag, what I wanted to calculate is how much am I paying in fees and how much is that value compared to the current value of my portfolio. And this value right now is 6. What 6 means is that the total number of trading fees I've paid equals 6% of my current total portfolio value, which is not great, right? And also it spiked a ton starting at the end of May. And the reason why that happened is because A, I traded a lot of volume, and B, the portfolio value went down a lot, right? So the numerator went up a ton and the denominator went down. So yeah, this is, not great, but it's also important to track this type of thing just to make sure you're not over trading and how much, in a way to make sure you're tracking how much fees are actually impacting your portfolio performance. This is why high frequency trading strategies are difficult to be profitable on because trading fees can kill you. But keep in mind, high frequency trading people also get rebates and stuff like that on their trading volume. So they pay much less in fees than what I'm paying with my smaller account. So this chart shows you the average position size for an altcoin, right? This excludes a BTC, ETH, or Solana position in the portfolio because I'm willing to take bigger swings on BTC, ETH, and Sol. If I'm ever taking larger positions, it's going to be BTC, ETH, and Sol moving forward. I've made mistakes in the past where I was doing it for Hyperliquid, for example, when volatility was super high. That's what I did in May and June, and I paid for it, right? So there are certain altcoins, even if they are new, they're new blue chips. I think you just need to be careful with getting too long those positions, especially when volatility is through the roof. And I made that mistake. I made some money off of it at the beginning, but then eventually you always pay. But so yeah, this line tracks the average position size for an altcoin in my portfolio, right? So let's just say up here, the value is 9.86. This means that the average altcoin position was 10% of my portfolio, right? So if I had $1,000 in the portfolio, my average position for an altcoin was $100, and that's pretty large, right? That this just shows you how much risk I was taking in the book prior to the drawdown at the end of May, right? And the reality is that even though I was like de-risking, my altcoin positions were huge. This is a lot, but at the same time, you have to toe this tough line where you don't want to be spread too thin, which is something I'm going to talk about in a later chart that's about to come up. But if you spread yourself too thin and you get it right, you don't really get much reward from it either. But right now, at this point in time, my average altcoin position is worth 3% of the entire portfolio. That's like a lot more manageable, and I think on the biggest day, I don't want to get really back above 10%, if I'm being honest. So 3 is good. You get a 2-bagger, it's at 6, you can cut it. And that's a bit healthier. Or if I even get it up to 5, right? And the reality is there's no guarantee you're going to even be getting 2-baggers in crypto anymore. But, if it goes up a little bit, it's back up to 5%. And then if it goes up a little bit more, it still stays under 10%, and I can keep things contained. And I don't want my risk to get out of hand. That way I don't have any more of these gnarly minus 20% months, right? Because I didn't really expect to be having my worst month at this point, right? I thought my worst month was going to be October 2025. And the reality is I've learned a lot along the way. So it's kind of just, it stings a little bit. But the good part is that at least I made 15% beforehand. So it justifies some of the risk. I kind of gave back just a chunk of change instead of it just being an outright loss. But yeah, so this is something that I want to track moving forward. Like I said, I don't want to get back above these values again. This was crazy. And the black dotted line shows you the number of positions that I'm holding, right? And the number of positions that I'm holding is 7 right now. And you can see that at the beginning of June, when I finally de-risked everything at the Pico bottom, right? Because you can see this black not dotted line, right? Just the normal line is the BTC USD price. So at the BTC Pico bottom around 60K is when I went completely flat, right? Otherwise, I was completely flat for the most part, going all the way down to the first bottom around 85K around Thanksgiving. But since then, I've been, despite the fact that I've been sitting in a cash heavy portfolio positioning, you can see that I'm still holding stuff, right? I was holding a fair amount of positions despite that fact. And, that was kind of a regret that I had throughout the bear market, is that despite the fact that my BTC momentum trading strategy was signaling you really don't want to be holding anything, right? It's been red almost the entire bear market, right? This is October 10th, 2025. And the first time we even got any exciting or blue was in the middle of May 2026, right? I should not have been holding through any of this, even altcoins, right? You really should not be getting that excited. The problem is that I had the same opinion around here, for those who have been following along since then, is that I thought there might have been a bottom here for crypto. And I was very, very wrong. So I'm kind of just playing this same game here again, and we'll see how it goes. But yeah, that explains some of these numbers, why I'm holding this many positions, right? It didn't make that much sense in retrospect. But at the time, right, I thought we were going to be bottoming here around the 80K, 85K level. So yeah. But yeah, right now I'm holding 7 positions, and I don't want to go out over 10 positions. So yeah, it's this balancing act between these two charts where I'm like, don't bet too much, right? 10% per position's a lot, but don't want to bet too little in terms of being too spread out. So this is one of those games you have to play with yourself and gauge whatever makes the most sense for you. And if people watching the video have any comments on what they view as appropriate, just let me know. Drop it in the comments below or shoot me a message on Twitter at PromoBullNino. Sorry for the cough. But that's it for the portfolio review. And I'm going to talk about a little bit crypto markets right now, if you do not mind. But yeah, so let's just talk about crypto. Like I said, we're kind of in a boring market right now, not much going on. And I think it shows a little bit in these moving average ratios, right? This table above here, let me zoom in a little bit, right? 30-day moving average, 90-day, 200-day. And this is the average moving average ratio across all perpetual swap pairs on Binance, right? This is a large sample size. And you can see that most of these are near 1. And that tells you that we are kind of trading at the same levels for the past 30, 90, and not 200 quite, but over the past 30, 90 days, we are kind of just not really moved. There's just not much action here. And that kind of always lets me know there's something about to happen soon, right? When you start to get all these values trading in a similar area, right? It just tells you the market's gone sideways over multiple time frames. That usually tells you there's a great deal of consolidation and possible volatility to unleash from under the hood. Let me look at this real quick. Let's go back to this volatility chart because this is another thing that just naturally tracks it. Let's see this. Wrong. That's not what I'm looking at. Oh, this value spiked. I don't think this is accurate though. 30-day volatility. I think this is a data error. But yeah, long story short, you can just see it's been dribbling out. Let's hide. Oh, never mind. I can't even hide it. Let's go up here. Let's look at this chart, right? So the blue line, oh, there's BTC price. Okay. So here is the average volatility, 30-day volatility for altcoins, right? You can see since November 2025, it's been down only. That's what happens in crypto bear markets. Down only volatility. Things are really boring around crypto right now through a long summer. So don't need to overcomplicate things. And that's exactly why the Levelytics book remains 50% exposed to the market. And over time, I don't really care about holding as much cash. And you can see that by this value decreasing, right? I'm spending less and less time with a cash heavy portfolio. And that has been the case since May 2026. Even though the market mega dumped, like I told you, when the market didn't fully rug on the Sailor scare, it kind of hit me. I was like, I'm a little more comfortable weathering the storm at this point, right? I don't think things are going to get that much worse, especially for altcoins, which have been in a bear market since the presidential election, November, December 2024. But yeah, guys, I think that's it. Not particularly exciting in crypto, so hopefully not too boring of a video either, but that is it. I appreciate your time and attention. If you guys have any input or questions about the video, the article, anything you guys want me to look at, I'm more than happy to hear people out, and I appreciate your time. Thanks again, guys. Have a great day.